Hello everybody. It's time for us now to sit back and look at the economy, business and markets in a more analytical fashion. In this show, Under the Lens, I put under the scanner some critical issues that investors contend with as they grapple with the market. Many important things happen, but there's no time to do a root cause analysis. In short, Under the Lens, we look at not what, where, when and how of things is, but the why of things. Private equity has become a very important feature of our financial markets. It refers to investments made by specialized firms in the capital of a company at a formative stage. It's in the form of a venture capital, and it performs the key function of backing entrepreneurs who have the brains, the technology and the drive to build businesses, but not the capital. It's also become a very big piece of the foreign direct investment that comes into India. However, people have very little knowledge about private equity. Probably all that is from hearsay. The nature of things, private equity is really private. To talk about this sector, its successes, its themes, its problems, its future, we have with us this evening Mr. Sanjeev Krishan, Executive Director with the global audit and consultancy firm PricewaterhouseCoopers, looking after the private equity practice. Thank you very much, Mr. Krishan, for coming over to our studios. Before we start our conversation with him on private equity, remember that as always you have your section 2 where you raise the questions which I will deal with. All that you need to do is to email your questions to underthelens@utvmoney.com. Well, Mr. Krishan, private equity, the way it's being done in India now, and PW is very much involved in it in various forms. Is it very different from the way it's done abroad, or it's broadly the same thing?
Well, yeah, there are quite a few subtle differences in the way private equity is done abroad and in India. I think one of the big things in India is that most of the private equity investments are for growth capital in India, and as you rightly mentioned, I mean, people who don't have capital. So clearly that's one big difference. Most of the private equity investments abroad are really looking at putting a lot of debt into the company, putting in some managerial expertise.
Some workout situations, everything.
Yes, and using really the capital imbalance. So basically, private equity guys abroad are really looking at businesses which are otherwise pretty good, but they have a bad capital structure, and they use a significant amount of debt, which is in some ways reasonably easily available to them, and then put their management expertise to work and ensure that a company which has a good model, bad capital structure, maybe the shareholders and the managers are not getting along. They sort of typically work in those situations and then turn the company around. And they would typically be ruthless. I mean, if there are parts.
Why is this not happening in India? I mean, there are, I think, hundreds of BIFR companies or turnaround companies which require some sort of asset reconstruction where the business model is basically good. Why is that not catching on in India, I think?
Well, I think it's do a little bit about the regulation, the whole space. In terms, if you look at the business recovery services space, I think there are too many regulations there which prevent some of these things happening. And clearly, from a private equity perspective, I mean, most of these guys would tend to look at re-energizing a company and making an exit in anywhere between 3 to 7 years period, 3 to 7 years time. So for them to sort of deal with the regulatory issues relating to, let's say,
getting some of the transfer of property, and many
things
complicated things. company law.
Absolutely.
All that's too difficult.
Absolutely.
So in India, most of the equity is coming in as a venture capital type.
As a venture capital, you know, to basically a bunch of Indian businesses. In fact, most of the Indian businesses are actually family owned, and you know they actually run those businesses. So there isn't so much of a distinction between, let's say, the managers and the owners. So it's basically families who have good businesses, who really want capital to grow their businesses, take it to the next level, maybe look at an IPO over a period of time, or maybe looking at to sell it over to a strategic investor over a period of time, and that's really how they create value into the company, which effectively the private equity guys ride on.
Your clients of PwC, have they been happy with their investments? Have they made money in India?
Well, I would say that most of them would be sitting on a good amount of profits that they made in terms of investments that were made, I would say, until middle of 2007 or so. I think in some ways the private equity investing degenerated in some ways towards the end of 2007, 2008, early 2008. They had to deal with, I mean, to be fair to them,
valuations were going crazy,
exactly,
right?
Exactly. They had
at that time, even the stock market valuations were
exactly
like 22, 23 earnings, and
so they had to deal with all of that, and promoter expectations all of a sudden, you know, skyrocketed. So they actually, and some of those investments were made at that point in time, and you know, there was a situation that you know, there was a private equity fund which was coming up almost every week, you know, and then it started to be, you know, 2 funds every week, etc. Because you know there was so much buzz about the India growth story, which obviously meant that there was a huge competition.
They come in as FDI route, is it?
Yes, most of it.
Most of them comes as FDI. Okay.
Yes.
Yeah.
Yes, most of it.
Okay, so either it's an automatic route or you go to the FIPB for approval.
Yes.
And they also joined the bandwagon, the Great India Shining Story.
Exactly.
And
so
but have they come out of it, or they're still licking their wounds, or?
I would say that, you know, as a result of all of this, what happened was that, you know, on a mark-to-market basis, they were actually sitting on significant losses end of 2008, 2009. I think now it's the second phase of private equity investing in India right now. A bunch of private equity investors who existed in 2008 don't exist in India anymore. A lot of you know, large foreign funds have actually gone back to their homes. I mean, they've closed shop in India, etc. And now we have, I would say, a more mature phase of private equity investing. The valuation expectations really have not come down. But the people who have survived whatever happened in the private equity space 2008, 9, they are more mature. They know how to deal with those situations. They don't need to necessarily put all their dry powder to work. They continue to wait for the right kind of deals. You know, there were some buyout funds like the Blackstone and others, Blackstone and Actis in particular, who have actually been successful in making some buyout acquisitions, and you know, that's the theme that they work on. So I think right now is the more mature phase of private equity investing, where you know you take the valuation as granted, you know, the high valuation as granted, and still try and work around it.
Okay, so the industry has matured. I mean, people have understood India in a way better. And is the exit always through the stock market, or does the promoter buys it out? I mean, what does it happen in India typically?
Well, there are 2 or 3 ways that an exit could happen. You know, one of the ways could, of course, be that there is some amount of guaranteed returns, etc. Structured transaction where the promoter could buy the private equity owner
but
back.
That won't be possible in a listed company, right?
Yes.
This is only in an unlisted company.
Yes. You know, that's absolutely right. The other situation, of course, is which was seen, and 2010 incidentally was a year of exits by private equity funds. So you know, IPO is one route. Last year the markets were good, so that was the other route. Then the third is the strategic sale route.
Just hold that thought, and come back, friends. I hope you found this session enjoyable, informative. We need to go for a very short break, but please don't go away. Mr. Krishnan and I will continue our discussion on the role of private equity in India after this small break.